Good afternoon and welcome to FYCM's FX Week Ahead live market analysis with myself, Giles Coughlin. I'm the Chief Currency Analyst here at HYCM, and I'm looking forward to taking you through what we've got coming up this week. Just as we're signing in, could you just let me know if you could hear me okay? Yeah, hi Nadir. Oh, that's great. That's lovely. See us is here. Hi Van. Welcome Hashik, Sammy, Thaddeus. Good to have you here, guys. Let's just see. Yeah, okay, that's great. We've got a really a good week coming up this week, and there's some good opportunities, particularly with the Brexit negotiations, which we'll get onto during the course of this webinar. There's a lot going on. I think most folks are arriving here. Just to let you know, as per usual, the idea of this FX Week Ahead is not to be giving trading advice and providing a signal service. The whole idea of this FX Week Ahead, Look Ahead, and the workshop that we do tomorrow, it's all about education. It's all about helping you guys to know how to make your own decisions so that you don't need me. That's my aim of these kind of FX Week Ahead workshops, is that I'm able to impart the system and the method by which you analyze the FX market in order to make financial decisions for yourself based on information. So just to get you know, this isn't a signal service, particularly as I'm looking at trade potential setup, support resistant levels, potential entries. It's all about education. It's all about showing potential and opportunities. It's not about providing a signal service, and it's certainly not trading advice. Just so you're aware of that, it's important that you get that right. And it can be confusing at first, so that's why I stress that each time. First of all, as we know, as per always, before we look forward to the week, we want to look back. And if you see this little image here, I have a picture of 1, 2, 3 pigeons. And that's because last week we had 3 dovish central banks. 3 dovish central banks. And they were the Reserve Bank of Australia, the Bank of Canada, and the European Central Bank. And each one of those central banks, hi Van, you guys coming in. Hi Graham, good to have you here. Each one of those central banks had a dovish alteration. And the reason we're looking at this is because central bank monetary policy is what drives currencies. So in the same way that a car's engine drives a car, central banks drive the path of currencies. And last week, 3 central banks changed their outlook and perspective. And that's going to affect the Australian dollar, the Canadian dollar, and the euro. So as we look at this, we're going to see that there's going to be an alteration on these 3 central banks and these 3 respective currencies. So the first one we'll look at is a Reserve Bank of Australia's decision and Governor Lowe's speech that came during the week. This was the first decision out last week, came on Tuesday, and Governor Lowe spoke on the following days afterwards. Often with the Reserve Bank of Australia, you don't get a rate statement, you don't get a speech by the governor right after the rate statement. It tends to come later in the week. So the Reserve Bank of Australia, they didn't change their rates. That was expected. It wasn't expected for them to hike or cut their rates. It was expected to stay the same, and it did. But Governor Lowe began to really outline the perspective of the Reserve Bank of Australia going forward. And what he said, which was really helpful, and it's this is what I've taken as a summary, is because it kind of sums up everything that has been said. He says, it's difficult to imagine rates will rise in 2019. Okay, so what he had been saying previously is that rates are neutral and they could go up or down, but they're most likely to go up. Whereas now the language, you see, it's one of the key tools that central banks use is their language. And what he's essentially said is, it's difficult to now imagine rates will rise in 2019. He says it's unlikely inflation will be a problem anytime soon. That's an understatement, because the Reserve Bank of Australia are continually overestimating their forecast of inflation. They're saying that the housing market, they think, is stabilizing, and they think the shift to neutral policy is not designed to support housing. That was the last rate statement. They went from sort of neutral to bullish to more neutral, and now this is more neutral to bearish. He says he's still optimistic that law of supply and demand will work to raise wages. He went on to say, the probabilities appear reasonably evenly balanced at the moment. He talks about GDP growth slowing, the number of difficult scenarios he outlined for the Australian government. Of course, we know there's the US and China trade issues, particularly here, that's hard for the Reserve Bank of Australia, because 30% of all of Australia's exports go to China. So the US-China trade difficulty weighs particularly heavily on the Australian economy, and that's a constant difficulty for them. But this is the key takeaway that I wanted to really share with you guys. And if you notice here, he said that this means developments in labour market particularly important. So one of the ways we can see future opportunities is that what the central bank is focusing on. That's how we start to know potential triggers in the future. So all of a sudden, what he's told us, and I summarized it here, is labour is key for the Reserve Bank of Australia. So that means future labour data is now going to be very important for the Reserve Bank of Australia, and is going to move the Australian dollar. You see how this works? Because they're signaling to the market, labour data is key for us. So therefore, keep a close eye on the monthly jobs data and wage indicators. As Lowe said, that apart from the labour market, the indicators are soft. So what he said, basically, we're in a situation where everything is pretty soft apart from the labour market. So we're going from a neutral to bearish outlook, and particularly important for us is labour data. So a date for your diary is March the 21st. There's employment data out on Thursday, 12:30 a.m. GMT time. And that is going to be very important data for the Australian dollar. Okay, so there's potential opportunities that can be had there. You now know the outlook. So for example, the way this works is, say it comes to Monday, you look at your calendar, and if you notice often on calendars, what you get, and I'll show you here, I'll show you how it works, is you get the, hang on, I'm just pulling over another screen. Here we go. What you get is you get the actual and you get the consensus reading. So before you have an actual reading, you have, you have what the consensus is. Okay, consensus for the retail sales group in January for the US was 0.6%. So if you get to the wage data, which comes out on Thursday, the 21st of March, and if that wage data is meant to be good, you know that that's going to be supportive for the Australian dollar. Say you know that the wage labour data is going to come out really poor, you know that's going to be really weak for the Australian dollar. So in this way, you can start to see potential triggers beforehand. Does that make sense, guys? Can someone just say on the questions whether they're understanding that point? Because that means that this is a potentially big event for the Australian dollar. And if you come on Monday, on the week beginning in which the March 21st is in, which will be the 20th, 18th, 19th, is it 18th or 19th of March, you're going to see the consensus data. So I hope that makes sense to you. After the Reserve Bank of Australia spoke, yeah, thanks, Graham. That's great. Thanks for letting me know. That's good. That's come across. Great. Thank you. Okay, so now this is what happened. The market has priced in a 67.6% chance of a cut now. Okay, so what they're saying now, after Governor Lowe spoke, you can see here the chances of a rate cut have now shot up. Okay, so prior to Governor Lowe speaking, the chances of a rate hike were just over 50%. So primitive and no change, just over. Now they've gone down to 32.4%. Okay, so you can see the market is now beginning to price in a 67.6% chance of a cut. And of course, when a rate cut has been priced into the market, the currency loses value. Okay, so that's Australian dollar bearish. So that's why last week we saw bearish pressure on the Australian dollar. Okay, very simple market dynamics. This is simple monetary policy at work. Okay, so basically market is moving now to a rate cut instead of a rate hike. Okay, so November the 30th 2018, they were looking at that, and now looking at a rate cut. Just pointing out a little technical setup potentially on the Australian US dollar pair. There's a head and shoulders pattern here with a break of the neckline. Potentially look for the extension of this area here, from here to here. When you have a head and shoulders pattern, when you have a neckline broken, as we've had, you can then potentially look to trade down that full length from there to there. You can look to trade from that full length from there down to there. Okay, so it's just head and shoulders pattern, nice technical setup. You can see that there's a change in the central bank policy, looking at a more bearish setup, and again you can look at a retest of this area for joining Australian dollar, US dollar shorts. So obviously you have to factor in what's happening out of the US, but just wanted to flag that up to you. Now I haven't taken that trade setup myself, but I'm flagging it up as a situation where the fundamentals and the technicals come together. Okay, Bank of Canada. This is Bank of Canada just changed its outlook as well. It maintained its overnight rate target. The Bank of Canada was kind of a bit different to a lot of other central banks because the Bank of Canada had been quite bullish and quite optimistic about its economy, and in a sense it was kind of out of sync with some of the rest of the other central banks. So when the GDP data was out very poor from a week on Friday, the expectations came that, oh, hang on, there's no way the Bank of Canada is going to keep their assertive, positive, bullish stance. Is going to change it, and sure enough, that's exactly what happened. You can see that the Bank of Canada, it's this phrase here, with increased uncertainty about the timing of future rate increases, Governing Council will be watching closely developments in household spending, oil markets and global trade policy. Okay, and it's going to take time to gauge the persistence of below potential growth and the implications for the inflation outlook. So you can see, okay, shift time for the Bank of Canada. And what it's done, it's this is the key line. Governing Council continues to judge that the policy interest rate will need to rise over time into a neutral range to achieve the inflation target. And that was changed to what we've just had. Governing Council judges that the outlook continues to want a policy interest rate that is below its neutral range. Given the mixed picture that the data presents, it will take time to gauge the persistence of below potential growth and the implications for the inflation outlook. With increased uncertainty about the timing of future rate increases, Governing Council will be watching closely developments in household spending, oil markets and global trade policy. So this is negative for the Canadian dollar. We're now starting to have a bias for the Canadian dollar. This was a little trade that I took exactly on the release, and I just show this to you for your education. I was just around the time of the data release. I read the Bank of Canada rate statement. Now, I was just setting up my trade station as it happened. I was a little bit slow getting to my desk. And so all I did is I went to the Bank of Canada website and I read the rate statement from the Bank of Canada website, and I could see straight away, oh, hang on, this is even more bearish for the Canadian dollar. This is confirmation. And so I entered without any hesitation. I was in within about 42 seconds of reading the release, just reading it, make sure, hang on, have I got this right? Yes, this is a continued bearish outlook for the Canadian dollar. As I said, it was a slow entry. I was dawdling a little bit, and then I was out within 4 minutes, no leverage, and just made a quick sort of 20+ points there, just showing you just showing you really, when you're focusing on these central banks, how in one sense simple it is to make a quick profit when you see that happening. And I also took a similar trade with this other central bank, which was the European Central Bank had a dovish tilt last week. Again, following this wasn't a surprise. There's been a real slowdown in the Eurozone, France, Germany. There's problems with Italy and their potential relationship with the EU, difficulty with Brexit negotiations, difficulty with President Trump threatening sanctions on the export of European Union cars, particularly from Germany, and all this is weighing really heavily on the Eurozone. And so the central bank has changed their forward guidance, okay? And they're saying basically the line before the central bank meeting was that the rate hike is going to be one and it's going to be summer 2019. They pushed that out to the end of the year and beyond if necessary. And they've also announced new TLTROs, which are basically the ways for banks to lend money. Okay, so it's very bearish for the euro, particularly on the offset. And I was trading the euro pound pair at the time, and I'll just show you how I did this. And as I say, this isn't because I'm bragging about my trades, so please don't misunderstand me. What this is about is showing you an important principle, because each week I'm talking about central bank policies, and if you think it could be a bit dry, how's that attached to, hang on, particularly if you're starting out, you think, well, I want to know how to trade. This is how you trade. You combine the fundamentals and the technicals. I'm just going to show you how that came together very simply for me last week. Okay, so it was here. Okay, it was on Thursday that we had the European Central Bank met, and this was where price was. Okay, so price was here on the daily chart. Now you see the outlook from the European Central Bank was very bearish. It was an instantly bearish decision, reaction. And I was watching price, and price was here, and I could see, hang on, I could see, look, this is very bearish outlook for the euro. At the particular time, there was some supportive potential news for the pound. Could Theresa May hack out something last minute? People were a bit more optimistic on the pound than they are now. So I thought, okay, well, I'll pair the euro with the pound together. I saw this pivot point. That's a key technical area, an easy place. I could put my stop above the pivot point. Price was around here, and at the time I thought, oh, I'm just going to sell it from there to there. I've got a pin bar, inside bar, a nice technical setup, rejection of the pivot point, fundamental change, the ECB pushing out likelihood of rate hikes, and a clear and easy profit target anywhere down into these daily lows. And that was the trade that I took on the Thursday. Again, all of that coming very, very simply from central bank forward guidance. Nice simple trade. So putting that, so here's some more details on that dovish tilt. But the key thing to get is that dovish shift, and they also slashed their growth forecast. So 2020 GDP is 1.6 from 1.7%. We got 1.5% versus 1.5% prior. So I'm just seeing a spike in the pound. Just got a headline up on Reuters saying British Prime Minister May has had a further phone call with EU's Juncker on Monday. Talks continue. May's spokesman. The market's a bit jumpy at the moment, waiting for a written statement from Theresa May on Brexit negotiations. Just saw a little spike in the pound of around 10-15 points. Can't see anything at the moment that's particularly driving that. It's just going to be really headline driven at the moment. Just saw that on my other terminal. Okay, but you can see, look here, the ECB cuts to everything. 1.2% versus 1.6%, 1.5 versus 1.7, 1.6 versus 1.8. And lots of negative growth forecasts being slashed there. Okay. So yeah, pound is really starting to move now. We've got around a 20-point move, heading up to 1.3050. 150. We'll get onto the pound at the moment. That is going to be, we'll get onto that. Before we do, just a quick thing. China's trade growth numbers slide. Exports collapsed by 20.7% in February, much worse than the market consensus of a 5% drop. The imports in USD terms dipped by 5.2%, which is well below the market expectations of 0.6%. So basically, the conclusion is that Chinese import data still illustrates a continuous downtrend for the time being, indicating that China's domestic demand is still on a soft footing at this junction. So look at that collapse in exports, 20.7%, nearly 1/5 of its entire exports, 20.7%, huge. Imports have dipped as well, so that's demand externally and demand internally is falling. It's a bad sign for the Chinese economy. That was out last week. That's going to carry on with risk tones. Okay, last week, Brexit supporters give Theresa May 3 tests for the EU deal. Now, this has moved on somewhat. Tomorrow is due to be the vote for Theresa May about whether the Parliament accept her deal. But I got to say, look, oh, here we go. We've got UK Brexit minister on Reuters. This is just out. Barclay will deliver oral statement on Brexit to Parliament on Monday. That's from the opposition-run Twitter account. So we are waiting now for an oral statement on Brexit. That is what the market's poised for. The pound is very much going to be headline-driven at the moment. So if you're trading the pound, you need to have access to headlines to be able to see that short-term direction. Now, I work for, as well as HYCM, being a currency analyst, I also do some guest posts for ForexLive.com. And they do up to the, pretty up to the minute financial data and news headlines. So you can always head over to ForexLive.com and check out the up-to-date if you haven't got a news feed. Other than that, you can get like a RAND Squawk, which is a paid subscription that will give you the news feeds as they come out. And this is a good example of how trading news feeds can be very helpful. This is all going to be headline driven for the pound. And if you're not aware of these headlines, just stay out of the pound for the moment with all these headlines. Very difficult to trade. Makes a lot of sense when you've got the headlines. And when you haven't got the headlines, it's just going to result in frustration, whipsaws, and being thrown out. So just step to one side unless you're doing that. If you want to hear what a squawk looks like, go to financialjuice.com and they have like a trial squawk. It's like on a 30-second or a 60-second delay, but it will give you an experience of what a squawk is like and how useful it can be, particularly with this scenario. So likely outcome is now seen either a deal or delay. Since I wrote this, actually is basically, I think the balance of probabilities now is shifting more to a delay. Okay, Theresa May could resign. I think there's a case for her potentially resigning. Getting very difficult. Her deal is going to be rejected probably again. EU are playing hardball. They're not, being cooperative with her. So the bottom line, lots of volatility for the pound. So stay locked into the news headlines. It's very difficult for me to give you any helpful information at this stage because it's so variable. Theresa May is about to speak, and when she speaks, the course of events are going to change from there. So be aware of that and be locked on and tuned into it. Looking technically at the pound, we can see that the pound is, so this is what I was talking about, these strong moves that was happening while I was been speaking. Some bids on the pound. Ooh, come on. Okay, it's being slow. There we go. Now I wanted to show you here, technically price has rejected the 100 exponential moving average on the daily chart. If we put a Fibonacci retracement level from here to here, we can see technically that we rejected the 61.8 level, testing the 50% retracement level. So this is like a really key pivot points here. That's a key resistance. This is key support. And prices bouncing between the two of them. It's going to need a headline, to start moving that upwards. Obviously, if you get a deal, then it's just entering the pound and put your stops below the 100 exponential moving average here. and you're playing high. You're playing up to an extension from here to here, from there to there, which is roughly, you have to do it yourself, guys, but it's roughly from there to there to there to there. It's roughly up to that 200 exponential moving average, which is around 1.36. 40, 30, something like that, roughly. That would be the next, that would be an obvious target. But be aware that anything can happen with these statements. But that's a quick, very quick rundown of the pound. We look at some of these things in more detail on the Monday, on the Tuesday rather, which is the workshop. Okay, guys. So with risks and opportunities. Haven't got time to look at the Canadian and the US jobs reports. I'll do it very quickly. Basically, it was the worst since since September 2017 for the US jobs report, plus 20,000 versus 180,000. Now, sometimes you do get like an anomaly with the US jobs reports. The Fed is data dependent, so this isn't helping, that data dependent case for the Fed at all. But just I'd say a word of caution, just wait, let's have a bit more data out, because the other information was quite good apart from the headline. So unemployment rate is good, petition rate good, average early earnings good, year on year and hour, and the month on month. So it's, it wasn't the end of the world, just the headline was figure. And every now and then, look, you can see once every now and then you get this really bad headline figure that comes out, but it's not necessarily indicative of a huge slowdown. So bad news, but caution. Canadian jobs report had a really good report, but that kind of doesn't really fit with the other stuff that's happening out of Canada. So CAD was bought on the headline, very good result. Look at US dollar, Canadian dollar, and it kind of sold off because, okay, it's almost too good to be true. You see, you got to be, the market sort of reads through data sometimes. But so I think the US dollar, Canadian dollar pair is still a buy on the dips at the moment. Chinese growth falls, we've already covered that in a different way. US-China data, GDP data is, US-China trade war is important because look, that's world's GDP. US has almost a quarter of the world's GDP. China has 15% of the world's GDP. And between the two of them, it's, 25 plus 15 is 40% of the world's GDP, roughly, is governed by China and US. So that's a big deal. And the back end of last week, it kind of thawed that relationship. So be aware of that. Now, okay, looking to what's coming up, we're going to have we're going to do a whistle stop tour of this. Let's just refresh that. I think we've got the retail sales out. Oh, okay. Headline on Reuters, Theresa May may be going to Strasbourg later on Monday. That's interesting. I wonder why she's heading off to Strasbourg. Certainly doesn't look like she's going to say she's resigning. It looks like she's still in the fight. Retail sales were good. Now, this was expected to be good because on the weekend, Jerome Powell had been speaking, and he'd sort of been saying that he'd been hinting that sales could have picked up, and they have. So that wasn't a surprise to see sales picking up. People weighing the US data to see, is the Fed justified at pausing their rates? That's the big issue. Are they justified or unjustified to pause the rates? So all the data is being read in that light. So everything for the US there on Monday. We've got US data out on Wednesday. We've got US data out on Thursday. Let's see. Yeah, now this is going to be jobless claims and new home sales. And look, the CPI data is out this week. Now, what day is that? That is coming out. Let's just see which day the CPI. Yeah, it's on the Tuesday. So this is very important for interest rates. How much inflation is it rising? Is it falling? Obviously, if inflation is rising, the way to handle that is by raising interest rates. So rising inflation is going to be bullish towards a Federal Reserve hike. So look particularly for this CPI data. Also on Monday, we had Haskell speaking, and we got Jerome Powell speaking as well. That can move the market. 3-star event. See what Powell says. How's he relating to this new retail sales? Has anything changed? That sets the path for the dollar. Then we got some data out for UK. Nothing is going to matter now, particularly because it's all going to be about Brexit. So all this UK data can just be, it hasn't got high priority. CPI data out on Tuesday. Then on Wednesday, we got some more industrial production. We've also got an ECB member speaking. That's going to be, interesting to see what the ECB are saying after the rate direction change, and Cure speaking as well the same day. And aside from that, and there's nothing particularly that interesting apart from US data. Thursday, we've got some consumer prices out of Germany. Germany is the largest and most influential Eurozone member. So what Germany does affects the whole Eurozone. And then more US data out on Friday. We got the Bank of Japan's press conference, and now the Bank of Japan's Governor Kuroda, what people are thinking is he going to increase easing? Is there more potential for easing due to the lower growth and lower inflation expectations? So that is what is going to be read here. And if it is more question of easing, that really weakens a currency. Okay, so if Bank of Japan says, yeah, we're going to increase our quantitative easing or start the program again and more, with more emphasis, then that's going to be negative for the Japanese yen, and it's going to be positive for the US dollar Japanese yen pair. So look out for that. And then towards the end of the week, we have some Baker Hughes US oil rig count. I think it's just worth looking. Those oil counts have been down recently, and just to see, is that fall in oil rig counts increasing? Obviously, a falling rig count means there's more likely to be less supply of oil, and that's going to push up the price of US crude oil. Guys, that is a week ahead. There's been a lot. Okay. Yeah. Brexit is, Raj, is in a tough situation at the moment, really vulnerable. So I think I would step aside for the time being. I think what's going to happen is that the deal is going to be extended. So I think you're going to see some pound strength. I'm not exactly sure where the euro is going to sit with this. It will depend on the nature of the Brexit news, because if it's very bad for the eurozone, then we're going to see the euro go down. So it's going to depend a little bit on what happens. It's all in the balance, Raj. So just look at the headlines and make the decisions when we have something concrete. At the moment, we don't have anything concrete, and it's just kind of people speculating and trying to position. So I just think patience for now until we get some kind of direction, because the thing is, you can always miss the news and then pick it up even the next day, and you can move in direction of what the actual shift is. So if you're not headline trading, just wait, then wait till there's a definite direction, and then you can wait for a pullback and trade in the direction that we're going in. Okay. Finally, that I would say, is that okay, Raj? I hope that's the most help that I can give. Okay, yeah, I know that's not exactly specific, but there's so many variables at the moment. I don't want to get, I can't be more helpful than that. Okay, guys, looking at the final things, don't forget tomorrow we've got the workshop 1 till 2. Could be interesting with all the Brexit news that's happening. Do drop in, come along to that. Remember as well that if you deposit your accounts, there's a one-to-one coaching with me for the essential one-on-one coaching. For $1,500, you get 1 hour session with me. For the pro, $3,000, you get 1 hour coaching session, 1 hour follow-up. That's really helpful to have the follow-up, because it means that what we do in the 1 hour coaching, we can see how that has carried on. And then there's the premium one-on-one coaching as well, which is minimum deposit $10,000, but you get 2 hour session, 1 hour follow-up, and then 1 week of VIP support, which is basically like, you email me, tell me the trade setups you're looking at, what you're thinking of, and then I have an interaction with you based on what seems sensible and what's less sensible. That's the way it works. Guys, thank you very much for attending. I look forward to seeing some of you tomorrow to 1 till 2, and I hope you all have a good week and be careful of the pound at the moment. There's so much going on. Okay, guys, Thank you very much. You take care, and hope to see some of you tomorrow. Yeah. Cheers, Raj. Thanks, Nadir. Bye, guys.